Good morning, everybody. This is Dan Hussey with AlgoDayTrader.com, bringing you our London session morning report. We had a rather slow NYSE Monday, rather slow Asia session Monday, and all of a sudden here, right into the European Open, we finally get some nice price action. And I'd actually like to begin with the with the DAX. Stepping out to a 4-hour, really, let's step back to the daily chart. We're watching the extension long drawn from a 677 high in July to highs. This is a very similar pullback to the daily pullback that the S&P has done, actually almost identical in time of both the anchor high and to market highs, and as well as almost identical in time at which the daily pullback traded at the 76.68. We are looking for upside targets on this daily pullback at the 89.57 area. Going down to a 4-hour chart now, we have pulled back into an ambush long, drawn anchor high to lows broke, and the market has pulled back into after the short has broken. Sorry, I'm still getting used to this charting platform. I don't like it very much. Pulling back into the full ambush long, drawn from lows where we traded the daily long to highs after. The highs were, of course, after we broke the full short. So once we punctured 618 lines, you start drawing up longs to the new highs until eventually it trades. And here it traded in quite a bit of a front run. But the bid off this level and the bids in the not just the DAX, but the FTSE, the FTSE, the S&P, and the Dow Jones have been so aggressive that I'm not shocked to see that the front run of this level, and really just this absolute rip fest and short squeeze that should take us up to ultimately a 86.38 target here for the 4-hour chart, which is the green pullback, and then eventually to the 89.90 targets of the daily extension long. The FTSE is a lot cleaner, a lot clearer, and overall just a better instrument to trade. It actually traded its 4-hour pullback to the pip down here at the 63.66 area. We have upside targets of the upside targets at 68.75s. Inside of this, going down to a 15-minute chart now, we pulled into a full long, and you can just make out that long right here, and have now traded to that long's target. We're going to pull from the lows at the entry to the target highs, and the FTSE actually has a next in the series long now at the 65.26. The catch here is going out to a 30-minute chart. We've now broken the full short off of prior highs. Having broken that short, we can now look for the full pullback as well. So I'm going to make this one blue so it's just a little bit easier to see, make it easier on our eyes. There we go. Oh, that's a terrible color for that chart. Make it red. There we go. So we could potentially pull back into the full long because we have broken the full short, which would be an ambush long down at the 64.79s. It's valid while above a 64.50 and has upside targets of a 66.42. That's the red trade here. Or we could pull into the next in the series, which is a 65.25, valid above a 65.05, and has upside targets at the 66.23. Neither one of these pullbacks is traded. If we do continue higher from here, we would be drawing a extension long from the highs of the prior trade to new highs. So we'll worry about that in case we worry about those other two trades in case we actually, well, no, I'll put the full pullback up here. I mean, it's a very valid setup and has a high probability of actually trading. But if we do break through targets without trading back into the next in the series long here, we will be looking for extension shorts. I'm sorry, extension longs drawn from the 65.44 anchor to whatever highs we find up here. Okay. So again, been trying to reiterate the significance of the bullish undertones in all of these markets, particularly as of late, and globally, equity markets are really resilient and actually very strong now. Now that doesn't mean there won't be pullbacks in the near term, but ultimately we're staring down the barrel of what looks like a gun pointed, not straight up, but certainly skyward. The S&P 500, almost identical here, has now broken the full short. I mean, the FTSE and the S&P are just in lockstep, and we're ultimately looking for that 1651 full halfway back long now. Yeah, the S&P has been a beautiful trading instrument this year. It's been highly technical, and is we are definitely anticipating continuation of this bullish rally. So we are also going down to 15-minute time from now because the full ambush long at 1651s is in fact valid. We're also looking for a potential extension drawn from the 1663 anchor to highs, which comes in at the 1670 level, which also happens to be today's gap fill, or the gap fill going into the U.S. session. So we'll continue to drag this extension, same anchor, new high, until the high is made and market pulls back. And 1670 quarter right now, 1670 half, is right where the extension long resides, and also happens to be, like I said, the gap fill going into Tuesday. So high probability of the market coming down and holding that as a support level. The dollar yen, pretty amazing setup here, but it looks like we have broken out of trendline resistance. The significance of this is that we actually came back down and tested trendline, broken trendline resistance as support, which was also the next in the series long at the 98.60s. The dollar yen has also pulled into I'd call it a 15-minute ambush long. Have breaking shorts. The long drawn from the 98.50s last Friday's low to Monday's gap up highs. Also happened to, I would consider having filled the gap, traded along, and has upside targets of the 148 level now. There is going down to now micros. I mean, going all the way down. There was a full long off of lows here that defended 618 lines. We're now in extension longs on the 5-minute trend, drawn from a 99.76 anchor to high, and we have support here at the 100 level. So this could be the push above 100 that will result in a continued acceleration higher. Excuse me. But if we do not hold this extension long, we'll be looking for the full pullback, either for the Globex for just today or from yesterday's lows. The euro yen, we've really only been watching this on a 4-hour time frame. Nevertheless, we finally are taking a stab at highs. We know we're in the 129 long with upside targets of a 134.60. This anchor is drawn from the lows on June 13th at 124.98 to July highs. Defended a 61.8 line, got participation, rallied up, failed at prior highs, kind of front ran a retest. This is a big bouncy support resistance chop fest, and is finally making its way up into and through highs, which we would like to see continue, as we are in fact long the euro against the US dollar. Now, I'm actually going to be putting out a special report on both the Aussies, but just to kind of break things down for those that have been following us, we've broken the extension short, taken it off the chart altogether, and I am getting ready and preparing myself to buy the dip now on the Aussie yen. It has finally confirmed it's a reversal off of its big daily long level at the 72s. Big daily long level at the 88.60s, drawn from the 72 lows to the 105 highs, 105.40 highs. And any pullback down into the 89 or 89.50 to 89 region should be, I think, bought. It's a great risk reward in terms of not only the swing trade towards the 113s and the price appreciation you'd see from that, but the positive carry of holding that type of trade could be absolutely astronomical. So one of my only concerns is the time frame in which this type of trade takes or could take to play out. And I mean, it could take a month to get down to our entry, and then it very well could take many years to get up to the target. And just like the last time a big daily level traded, which I actually have the chart up here. The last time this order of magnitude level traded, it took almost 3 years to get from the entry the first time it traded in 2010 May of 2010 to the highs that were actually in March of 2013. So yeah, I mean, it's a one heck of a long-term trade. And if, do we anticipate this type of price action? Maybe. Maybe not. Maybe it goes straight up there. Maybe we, the type of trade I put this, I make this equivalent to is, the ambush long pullback now would be like this trade here. You can see how it traded, got free, went to target, and ultimately became a swing up to a much higher high. And that's certainly the type of trade I would like to participate on and be a part of. So but anyway, the 4-hour trend has broken, and we are looking at ambush longs on the Aussie yen, drawn from our 86.42s to highs, wherever those come in now. The British pound, stepping out to our daily chart, running up and into the 158 resistance, but in the meantime, coming down to 4-hour, we are in a next in the series long, with upside targets of a 158.60. Inside this, going down to a 15-minute chart, it's kind of a pretty tough chart to look at because it looks choppy and sloppy, but there's actually a pretty good trend here. If you ignore the first trade, go to the second, third, trade a front run, almost to targets, retrades, retest, test 618 line, hits target, and then ultimately blew through targets. Now drawn from the highs of the original entry to new highs. It looks like we have an extension long that has been flagging against a full short off highs, very similar to what the euro looks like it could be doing right now. But ultimately, looks like we have the 156 or 157, 53 upside target from just our extension alone, and of course we have larger upside targets that we just discussed. So trend is up until it's not. The euro US dollar, an interesting little chart as of late. We were able to get into the swing long, drawn from a 127.45 low to the 134.54 highs of this year, or highs of this late in the year, in September. Well, I guess the highs were in August, but it's neither here nor there. We got long the 131s in the euro. We do seem to be kind of running into a full short here off of highs, which is a little worrisome. But we are long and free, and that's all that matters. So we are going to be looking here in the next, the rest of this week. We want to see a solid break of this full short. We want to see the push now to 133.30s, 133.20s, and break this short, just like many of our other, like the Aussie dollar and the Aussie yen, they've traded and broken their shorts as well. So anyway, difference being is this actually gave an opportunity to get long, which we did. We bought this full pullback, and going down to a 15-minute chart, it's unfortunate. It has almost been straight up off of lows here, but we are able to engineer some potential extension levels. And it's really tough because it kind of feels and looks like it might be how do you say, forcing it a little bit. But the fact of the matter is we got long 131.08s. We were able to take our first target and get free, and the rest is up to the market. So we're trusting that the prevailing trend will continue higher and continue into and through September. But we are long and free with no skin in the game, except for potential upside gains. So I guess when I say no skin, I mean no risk. Okay, and that's about it for the euro. We're in 131 longs, target 136s. We're long and free, and we by taking half the position off at plus 80 pips, and the roughly plus 80 pips, and leaving the balance at negative 70 pips for a net zero, a wash. The Aussie US dollar, very similar to its Aussie yen counterpart, has broken its 4-hour extension shorts. Now that they are broken, we of course can drop the full halfway back long, the full ambush long as well. However, there's a more intriguing level in the near term that has actually gotten a reaction here from the 92.40s, and it's this extension long drawn from the 91.89's anchored highs. It has a 93.15 upside target, so a nice 60 pip upside target from the entry, and we'll just continue to drag that larger swing higher and anticipate a pullback. So really support here is a 92.40. The heck, a 90. No, that's not what we're looking for. One moment. Where is it? So support, I have it at 92.40, a 91.70, and a 90.70. So interestingly enough, almost every 70 pips. Okay. Finally, Euro Aussie. We've been talking about this, but it looks like it's still trying to find its way lower in shorts, and ultimately we're looking for what will take us into the 141 level, which is an extension long on a daily chart drawn from a 131.97, 130. It's 132, whatever you want to call it. It's close enough to highs in terms of these price measurements we're doing. Two pips isn't going to change the level significantly, considering the whole pole is, oh geez, it's 800 pips, from the highs in which we're using as an anchor to new highs. Anyway, 141.09 looks like our support level for the Euro Aussie with a 154.53 upside target. If we do break below the 138.90s, I'm a seller in a 50% pullback. But until then, I want to be long 141 figure, risking 100, 120 pips for a shot at the 154 targets. Okay. And actually, I kind of want to bring up gold here. Gold has traded into that 4-hour short and has continued getting that reaction. Again, this is an ambush short in the direction of taking us into the 1300 ambush long, which is actually in the direction of trading up into the 1500 ambush short. So gold is ambushing everybody in every direction. And really, I guess what I'm getting at is that it's broken its downtrend in the near term. We're looking for it to trade up into the full 50% short, which is the big long-term short or position. But in the very near term, it also looks bearish because we are, did break and are looking for a 50% short. Not looking for it, it already traded. We were looking for it from the 140 or the 1438 highs to 1360 lows. So it does look like we have the start of a micro downtrend in the direction of the 1300 figure, which hopefully that long would pop us up and take us up into the the 1550 range, which is where the big daily short is, and we can take a look at that here. There you go. From all-time highs to lows after here is a 1550. So, all right, everybody. That's all I got for you for our London morning report. Price action's been pretty good so far this morning, and hopefully this continues for the rest of the week and the rest of the quarter. But ultimately, it looks like we're heading into a pretty good nicey session. So, have a great day, everybody, and we'll be back with you as price action develops.